being able to show your investors that there's an opportunity. You're not asking for money. You're offering an opportunity. That's really, really important. Hello and welcome. My name is Gino Barber, one of the co-founders of Jake and Gino. And in this how-to video, I want to really discuss how the Jake and Gino community members, they've closed over 13,000 units this year. Now that's the number that I know it's really hard to calculate and to tally, but that's what I've been able to document over the last 12 months. While people out there saying there's no deals, the Jake and Gino community has closed over 13,000 units. They've raised over $400 million this year, which is amazing. It's a phenomenal number. And Jake and myself, we've closed 4 deals this year. We've closed a 4 unit. Hey, no deal is too small. 4 unit is phenomenal. We closed a 62, we closed a 67 unit, and we closed a 33 unit back in October. How are we able to do that? That's the crux of this video. What are Jake and Gino community members doing differently than the average investor out there? It's just amazing. Now, I want to go over the top 3 things, but before I do that, if you want to receive premium content, every Monday, Jake and I host a weekly live masterclass with our community members. If you want to receive some of that content, subscribe to the Jake and Gino channel on YouTube. Hit that subscribe button. You'll be receiving those videos because what we do is every Monday, we bring on an expert. Sometimes Jake and I love to teach weekly, but we'll bring on a cost segregation specialist. We'll bring on a capital raiser. We'll bring on one of our coaches, possibly even a student doing a testimonial, syndication attorney, insurance. The list goes on and on. We have an expert every week talking to the community and talking to Jake and myself. So if you want some of that content, subscribe to the Jake and Gino channel. Now let's dive into the top 3 things that we did and that our community did. It's not rocket science. And the first thing is broker relations. If you don't understand if the brokers are the gatekeepers in real estate, then you're missing out. And that's why Jake and I, on our very first deal when we started back in 2011, we didn't understand it. It took us 18 months. We didn't get that the brokers had the keys to the kingdom. You have to treat the brokers great. You have to become really, I don't want to say friends with them, but you have to create a rapport with them. You have to make them think of you as the expert. When they get a deal across their desk, who are they calling? You want them to call you. That can be challenging when you're first starting out. That's why you need to build the foundation. Jake and I, we didn't really have a foundation when we started. We were just looking for deals. Then we created the foundation, which was buy right, manage right, and finance right. But you need to create a foundation. A couple other things you need to do when you're dealing with brokers, which is very important, at least in my opinion. Please understand your market. Become an expert in your market. Don't talk to a broker and say, hey, Mr. or Mrs. Broker, I'm looking for 9 caps in this market when the market is a 4 or a 5 cap. You're going to lose them right away. Understand, the underwriting of the market. Understand what the numbers are. Understand what the income and expenses are. Become an expert in the market. When a broker sends you a deal, don't tell the broker, oh yeah, Mary, I got the deal, thanks. I'll get back to you. I'm really busy right now. I've got a W-2 going on. Mary doesn't care. Mary wants an answer from you as quickly as possible, and it is your duty as an investor to underwrite the deal and get the answer over to Mary as quickly as possible. Do what you say and say what you do. Treat the brokers like gold. Now, the second topic really aligns with the first one pretty well. But for me, it's amazing and incredible that most investors don't have what we like to refer to as a buy right criteria. Jake and I were speaking at an event probably around 2 years ago, and it was a really high-level syndicators event. There was a lot of syndicators, a lot of GPs out in the crowd. And Jake and I posed the question, how many of you out there, by a show of hands, have a buy right criteria? And there were blank stares. Nobody raised their hands. And I was shocked. I just assumed that if you're an experienced investor, you need to have a buy right criteria. And it really needs to focus on what are you trying to accomplish? And does it fit in the marketplace that you're looking at? And the criteria does change over time. As the market cycle lengthens or changes, your criteria has to change. When Jake and I started out back in 2011, if you recall, it was a real heavy buyer's market. I mean, there were a lot of deals out there. Asset prices were really low, cap rates were really high. That was the time to buy older, distressed assets. You could add value to them. You could raise rents You could sell them or refinance them. And we did that in the cycle leading up to 2017, 18, 19, 2020. Things started changing. Those assets started to get more expensive. So they were very comparable to what we call, the B assets. So we started changing our buyer's criteria. I want you to become crystal clear on what you're trying to accomplish, what you're trying to buy. What is your criteria? I can rattle off what ours is right now. We're looking for newer vintages. 80s and newer would be great. 1990s and newer would be even better. We're looking within 3 hours of Knoxville. We're looking for median incomes of at least $50,000 and more. We love 2-bedroom, 1.5 bath townhomes. Boy, if they've got garages, even better. We're not crazy with breezeways, but we'll take them. And if once we buy them, we need to really put vinyl and really protect them because they look terrible. We're not really big fans of decks. Decks have a lot of CapEx expenditures. That's why newer assets are great, but we're not really crazy about decks. We love washer dryer hookups. If they've got washer dryer hookups in the unit, phenomenal. Do you see how my criteria all of a sudden is really refined? And listen, we'll deviate from that criteria. If there's 1-beds in the property, not a big deal, but we don't want a 30 unit with 25 1-beds and 5 2-beds unless it's the right price, right? Price does matter, is a really big function of it. But do you see that crystal clear criteria? Well, the last 3 deals we did this year, the broker brought us those deals because she knew we were looking for those deals. That 33 unit, 2 and 3 bed townhomes. It was built in 06, has washer dryer hookups, beautiful layout, great part of the market. Median income, I know, is north of $60,000. It was just nailed our criteria. And it's one of those things where Jake was telling me over the phone, explaining it to me, and he's like, dude, just wait till you see it. So I went out and saw it, and as soon as I walked on that property, it was like, hallelujah. You just know it. You feel it in your bones. And if you have that criteria and you're able to explain that to the broker, you've created rapport with the broker knows what you want. You sound credible. You sound like a pro. That's the second thing that the Jake and Gino community did really well. They all know what their buy right criteria is, and more importantly, their brokers know it, property management companies know it, and their investors know it. Now, the third one, it's really important. You remember what I said about raising capital? You can have the best deals on the planet, but if you're not using seller financing or you're not partnering up with others, you need access to capital. You need to be able to raise capital. And like I said, the community has raised over $400 million last year. And how did they do that? Well, they learned the syndication model. They used the community within, people partnering up, people networking with other people, but they also learned how to build a brand. I mean, I wish I can go through this on this how-to. Maybe I'll do that on the next how-to. But building a brand, having the business plan, being able to be credible, being able to speak the lingo, being able to show your investors that there's an opportunity. You're not asking for money, you're offering an opportunity. That's really, really important. So the access to capital is important. If you'd like a copy of my booklet talking about how to raise money for your next multifamily, just email me, gino@jakeandgino.com, and I'll send you the ebook by email. Once again, it's gino@jakeandgino.com. I'll send you out that multifamily booklet. It talks about certain things that you can do to raise capital. And this is what 3.1, I had 3, but this is an extra one for you. Unfortunately, or fortunately for some of you, you need to be top of mind and you need to be on social media. And listen, I get it. I may sound old and stodgy sometimes. I'm not really a big fan of social media, but get over yourself. That's where all the eyeballs are today. Oh, the good old days, they're gone and they're not coming back. And that's okay. You need to be on social media. Oh, Gino, I'm not really comfortable with video. I don't like my voice. Been there, done that. Just try something you like. Do you like to write? ChatGPT is a great way to start a blog, to help you write a blog. Write an ebook. Start a podcast, start a YouTube channel. You need to be on social media. Start doing posts. You need to be on social media. You need to be top of mind. And not only does that help you to raise capital, all of a sudden, the brokers in the market start seeing you putting posts. And it's almost like it's free media. One of the reasons why Trump only spent $380 million on his campaign was all of the free media he got with all of those podcasts and all of that media that was just following him day to day. Now, listen, you're probably, and I'm probably not going to generate that kind of free media. I get it. But putting a post on LinkedIn once or twice a week, starting a newsletter, throwing out a little video, putting some stuff on Instagram, something on Facebook, find out something that you like to do. Get consistent with it and start putting it out. And it's okay if nobody's watching. Sooner or later, they will be watching. And sooner or later, a broker may stumble across one of your posts and go, oh, Jake and Gino. And I can't tell you how many deals we've gotten from the education community, and not even from the community itself, but from the events that we hold. I remember back at MM5, we had a broker panel. Well, our broker from Knoxville was on the panel. After she got off the panel, Jake and I are backstage, and she's like, Jake, Gino, I know you guys don't buy land, but I've got this piece of property. Would you take a look at it? Absolutely. That deal would have never have come across our desk if we didn't have the education platform and we didn't have that relationship with your broker. So get out of your comfort zone. Go start working with a coach. Find out the medium that you like. Where do you shine? Are you a great writer? Are you a great speaker? Are you great on camera, great on video? Where are you attracted to? Become transparent, authentic, start speaking about it, and let people see you. That's the important thing. So once again, let me recap these 3 things because they're really important, and they are the difference between closing a deal in 2025 and struggling. The first one, broker relations, truly important. The second one, setting up your criteria, your buy right criteria. What are you looking to buy? We don't lack motivation. We lack clarity. You're going to have clarity with that buy right criteria, and so are your broker friends, and so are all your investors. The third one is access to capital, and the 3.1 is to be top of mind. Now, if you want to learn more about how you can join the Jake and Gino community, just go to jakeandgino.com to learn more. Once again, I wish you all a happy 2025. Let's go out there and let's close some deals. And as we like to say, Jake and Gino, real people doing real deals. Take care, and I'll see you on next week's How To. Thanks for tuning in. If you enjoyed today's video, be sure to like and subscribe so you'll never miss another episode.